How much would it take you to live off your investments, free from the 9-to-5 grind? In today's video, we're diving into exactly how that could be possible with JEPQ, a unique ETF that pays out dividends regularly. We're not here to sugarcoat anything or sell you dreams. Instead, we're going to explore the cold, hard numbers. How much do you really need to invest in JEPQ to cover your living expenses? Is it possible to rely on it for steady monthly income? And what's the lowest amount you need to get started? By the end of this video, you'll have a clear idea of whether JEPQ is a smart choice for your financial future and how to use it to reach financial freedom, maybe even sooner than you think. Chapter 1. Understanding JEPQ. JEPQ, or the JP Morgan Equity Premium Income ETF, is a popular choice for investors looking for steady income. But what exactly makes JEPQ stand out from other ETFs? Let's break it down. First, JEPQ follows a covered call strategy. This means the fund owns shares of big tech companies like Apple, Microsoft, and Google. But it also sells call options on those shares to generate extra income. This is key because, in addition to earning dividends from the stocks it holds, JEPQ brings in income through these options. This extra income is what allows JEPQ to pay such high monthly dividends to investors. One of the best parts? JEPQ pays dividends monthly, unlike many ETFs that pay quarterly. This means a steady cash flow every month, which is ideal if you're looking to supplement or eventually replace your income. JEPQ also has a relatively low expense ratio of 0.35%, making it affordable to hold long-term. And with about 50% of its portfolio in tech stocks, it provides exposure to companies that have both growth potential and stable performance. Now that we understand how JEPQ works, let's see how much you actually need to invest to live off its income. Chapter 2. Dividend Yield and Monthly Payouts. One of the main reasons investors are drawn to JEPQ is its attractive dividend yield. Currently, JEPQ offers a yield of around 10%, which is quite high compared to other ETFs on the market. This high yield is possible because of the covered call strategy, which generates extra income that's passed on to investors in the form of monthly dividends. On average, JEPQ pays out about 40 to 45 cents per share each month. If you hold 1,000 shares, that translates to roughly $400 to $450 in dividends every month. Multiply that by 2,000 shares, and you're looking at nearly $900 per month. This is why many people see JEPQ as a solid option for creating a reliable income stream. The beauty of monthly payouts is that they offer a steady flow of cash, unlike many ETFs that only pay quarterly. This makes it easier to manage your finances, especially if you're using these dividends to cover monthly expenses. And when you reinvest the dividends, it can help your investment compound and grow faster over time. Now, let's dive into the real question. How much do you need to live off these dividends? Chapter 3. Calculating the minimum investment. Now that we understand how JEPQ's dividends work, let's figure out the minimum investment needed to live off them. First, you'll want to calculate your monthly expenses. This will be different for everyone, but for the sake of this example, let's use a common figure, $4,200 per month. JEPQ's current dividend yield is around 10%, and it pays roughly 45 cents per share each month. To cover $4,200 in living expenses with these dividends, we can do simple math. You would need about 9,334 shares of JEPQ to generate this income. Here's why. 9,334 shares multiplied by 45 cents equals about $4,200 per month. At a share price of around $50, buying 9,334 shares would require an investment of roughly $466,700. While that might seem like a lot, it's important to remember that JEPQ's high yield allows for smaller investments compared to other income-generating assets, which often require much longer principal amounts to deliver the same level of income. If you don't have $466,700 to invest up front, Don't worry. You can start with a smaller amount and reinvest your dividends over time to take advantage of compound growth. Even starting with $50,000 and regularly adding to your investment can help you build toward your goal of living off JEPQ's dividends. Now, we'll explore some real-world scenarios to see how this can work for different income goals. Chapter 4. Realistic Scenarios. Now that we have a basic idea of how much it takes to cover $4,200 per month, let's look at some more realistic scenarios. Not everyone has the same income needs, so let's break it down for different monthly targets. Scenario 1. Modest living with $2,000 per month. For someone who needs $2,000 per month, the required investment is significantly less. Using the same math, if JEPQ pays around 45 cents per share each month, you'd need about 4,445 shares. At the current share price of around $50, this would require an investment of approximately $222,250. This smaller target might be achievable for those who have been consistently investing or plan to build up over time. Scenario 2. Higher living standard with $6,000 per month. On the other end, if your living expenses are $6,000 per month, you'll need about 13,334 shares. This would require a much larger initial investment, around $666,700 at the current price of JEPQ. While this is a significant amount, it's still a realistic goal for someone looking to build their portfolio over time. Remember, you don't have to start with these large sums. By starting with smaller amounts and reinvesting your dividends, you can grow your share count and gradually increase your monthly income. This makes JEPQ a flexible option for various income levels and financial goals. Chapter 5. The Power of Compounding. Compounding is one of the most powerful tools when it comes to growing your income, especially with an ETF like JEPQ. When you reinvest your monthly dividends back into buying more shares, those additional shares generate even more dividends over time, creating a snowball effect. This means your investment grows faster without you having to add more capital yourself. Let's say you start with an investment of $50,000 in JEPQ. With a 10% annual dividend yield, you'd receive around $5,000 in dividends during the first year. If you reinvest those dividends, your second-year earnings would be based on a higher number of shares, boosting your dividend income. Over several years, this can lead to a significant increase in both your share count and your monthly income. For example, after 10 years of reinvesting dividends, you could see your portfolio grow from $50,000 to over $180,000, generating an annual income of more than $13,000. This is the magic of compounding. It accelerates your wealth building without you needing to constantly inject new money. Now that we've covered how compounding works, let's take a look at the potential risks and downsides of relying on JEPQ for your income. Chapter 6. Risks and downsides to consider. While JEPQ offers an attractive dividend yield and the potential for steady income, it's important to understand the risks involved. One of the main risks is market volatility. Since JEPQ is heavily invested in tech stocks, any downturn in the tech sector could affect both its share price and dividend payouts. This means your monthly income might fluctuate more than expected, especially in stable markets. Another downside is that covered call strategies, like the one JEPQ uses, limit the upside potential of the fund. While this strategy generates extra income, it also caps how much the ETF can gain in price during strong market rallies. This could mean you miss out on significant growth compared to other investments. Lastly, JEPQ's relatively short track record means it hasn't been tested over many market cycles. For long-term investors, this adds an element of uncertainty. Thanks for watching. If you found this video helpful and want to learn more about building passive income and smart investing strategies, be sure to hit that like button and subscribe to the channel. Don't forget to ring the notification bell so you never miss our latest updates. See you next time.